the next phase of the major tech cycle. So 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net or handheld supercomputers, and then 2024, okay, which is still 6 years from now, 5 years from now, is the trust net, okay, the internet of value.
Okay guys, Luke here, and in today's video I got a lot of things to discuss, mainly about a particular video that I saw last week, and I want to go over some of the golden nuggets that I identified in that video. But despite that and institutional investors coming in, a few other things have been happening. Now, as we can see, the entire crypto space at the moment, it's the 7th of December 2018 at the moment, it's a total bloodbath. The Bcash war intensifying. You got Bitcoin SV flipping in against Bitcoin Cash. You know, what's going to happen with Bitcoin Cash in the future? I don't know. I think it's lost pretty much all of its credibility. Other news has been going on. More 51% attacks have been happening. Vertcoin and I think a few others have been hit. And 6 months ago, I did mention this, how we're going to see more attacks on these vulnerable proof of work coins. I think Vertcoin, although I quite like Vertcoin because it's very similar to Litecoin and Bitcoin, and it's got a good community, it was a sitting duck. I think we're going to see more of this as time goes on, but I wrote an article and I made a video about it 6 months back. So check those out. I'll leave the links below. So before we get into the meat of this video and what I want to really discuss, this can't be ignored. And you know what? I'm going to do a live stream in the next few days regarding this topic with R3 and XRP. This is the second big tech company that's using the XRP ledger. You've got Ripple and R3. They're basically creating some like a universal settler application for global payments. Now, what's really big with R3 is the amount of partnerships that they've actually got. I'm not just talking one or two. And if you go onto their website, and again, I'll link to all this below for you guys to see for yourselves and so that you guys can verify. But there is just a huge list of partners which are now potentially going to be exposed to blockchain technology and cryptocurrencies through R3 alone. Now, the list goes on and on. Again, you can kind of rewind and look at these partnerships individually. It just goes on and on and on. But I'm trying to show you guys just what is happening and why this is actually such big news, not just for XRP, but for the whole blockchain in general. Okay, so what I really wanted to go into as quickly as possible is this video I saw. And we've got some institutional investors being interviewed about the blockchain and cryptocurrency space. Now, these guys recently put a $1 million wager against a group of hedge funds that cryptocurrencies will outperform the S&P 500 in the next decade. Now, we have to think, why are they doing this? Is anyone actually going to take them up on the challenge? Or is everyone else with the big money and the smart money just as bullish as these guys on cryptocurrency? And again, keep in mind, the prices as we speak are plummeting. The RSI on crypto is in the gutter right now. So it's interesting that we're seeing all this happen behind the scenes. The big money is clearly moving towards crypto. So when are the institutional investors starting to come in? What's the ETA on this? Well, according to these guys who did give out some really interesting insights in their interview, they say it's on its way. It is coming. It's not if, but when. But also, to a certain extent, it's already here. We have things like, NASDAQ, ICE, the New York Stock Exchange is building their own platforms for cryptocurrencies. We're seeing Fidelity, they're mining cryptos. So much big corporate money is already here. They're already building out the infrastructure. The regulations are slowly beginning to come out to create this trusted environment for these guys to start really making profit. But an interesting thing as well that that these two go over is the difference in how they view digital assets. They don't focus on the price like the retail investors do. They're not wondering if it's gone up 20% or 10% or 5% in the space of a day. They're looking at how this is going to shape out in the long term. See, a lot of people, a lot of retail investors don't switch the TradingView chart from a 24-hour chart to like a 1-year chart. They don't seem to look at the bigger picture. I mean, these guys are looking for a key entry point, right? And this is exactly how they worded it. Key point, key times to enter. And rather than panicking and rather than looking at this space as a failed project, as a failed ecosystem, they merely call it a distressed asset. Okay, so they're looking at the best opportunity to maximize the potential for profit. While everyone is buying high and selling low, they're doing the opposite. They're buying now. They're averaging out. They're spreading their risk. They're minimizing risk. This is what they're doing. The blunt reality with cryptocurrencies is that it's an extremely volatile space. That comes with a lot of risk, as we all know. But traditional assets don't come with that type of with those type of gains. These people are seeing cryptocurrencies yielding higher returns in the long run. So now they're more focused on these assets like Bitcoin, XRP, Ethereum, all of these. Maybe not Bcash, but they're focusing on all of these assets because these assets are bringing much higher gains. Now, this like we see here, and it's actually good that the prices are down while I'm doing this video because it actually highlights what exactly is going on. This is bargains for them. They don't see this as a bad thing. They are looking at value. Okay, they look past the price and they look at the underlying value. Where is this going? Who is using this? Who is going to be using this? How are businesses going to connect to these cryptocurrencies, to the blockchain technology? This is what they are wondering and asking. And from what how those two are speaking, when people say that the legacy system is out of touch, I don't think so. I think these guys have done their research. They're doing their research, and they're up to date with what's going on in the space. They even know the lingo that everyone uses in the cryptocurrency sector as well. These guys are not sleeping. They are buying. They are averaging in, and they are accumulating for as much gains as possible. Another important point that these guys bring up in the video is the mindset, the difference in mindset, and the phases that we're going through at the moment. How the infrastructure has to be built out first, how retail buyers are driven by the fear of missing out, FOMO, by greed and fear, how the price is based on those two things, while the value is more, which is what these guys are looking at, is driven by not speculation, by adoption, and who is using it and for what purpose. Now, the impression that I've got from this video, because I've watched this video several times to try and dissect what they're really meaning. I don't think they see Bitcoin and cryptos as just a store of value or as just a cash system to settle payments. I think they want it to be a bit of everything. I think they want cryptocurrencies to be used to store your wealth, like a gold or silver, and also used as currency. I think they want these different use cases, including, application development, of course, like with Ethereum and EOS. I think they want to see different use cases, and I think these different use cases will add to their whole to how they value this. Now, retail investors are just looking at the price. They're not even looking at the hashing power. They're not even looking at the amount of development that's going on. They're not looking at that JP Morgan is hiring more programmers than ever to develop and research blockchain technology. They're only interested in the price. And this is why the markets always rinse the average Joe. The 80% always get rinsed.
But in investing, you do two things really. They buy what they wish they would have bought. Spectacular at it. History is replete with examples of people buying after an asset goes up a lot, time after time after time. And then they compound the problem by selling what they're about to need.
These guys are also expecting the volume in the crypto space to grow again. So to sum this up, these guys are ultimately very, very bullish on crypto. They're very, very bullish on Bitcoin. They discuss the importance of just patience, how comfortable and complacent investors don't always make the most gains. These guys, what I'm seeing and what I think is going to happen with blockchain's adoption is connecting the businesses to the ecosystem, to the technology, just like how we saw at the start of the century, in the early 2000s, where all the .com companies, the Amazons, Cisco, Facebook, Google, how businesses began to use them, how businesses were connecting themselves to the Internet of Things, how business, nowadays in 2018, if a business hasn't got a website, do we even notice them? Now, back then, a lot of businesses didn't have websites. And it's the businesses who adapted and connected with the new technology that are still around today. Look at Cisco, look at Google, look at Amazon, look at eBay. They just dominate. The FANG stocks are an excellent example of this. Apple, Microsoft are now the highest valued company on earth, or Apple is kind of between those two at the moment. It's really interesting to see how history is replaying, or the cycle is replaying again. But if we zoom out more, we see a larger cycle playing out with this whole Internet of Things being integrated into our society. The impression I did get is that these guys are planning. They have phases which they're running through. A key year he mentioned was 2024.
And we're in what I believe is the next phase of the major tech cycle. So 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net or handheld supercomputers, and then 2024, okay, which is still 6 years from now, 5 years from now, is the trust net, okay, the internet of value.
I don't think he was really meant to say that, but I think he slipped out. But this is good. This is good because now we're in that final phase before this internet of value starts coming in. We have the internet of things, but we still can't transact money just as easily as we can send information in real time. So I think he slipped up there, in my personal opinion. I don't think he was meant to say that. But if we look, as he said, and as we've all been saying, if we zoom out at the cycles, we are entering this phase where this is coming. Money is going to be sent as easily as an email. There's loads more gold nuggets in that interview. I just haven't got the time to go over it with you guys, although I'd love to. But I recommend watching that video, watching this video here 2 or 3 times. 2 or 3 times to really get what they say. It's only a short interview, it's like 25 minutes. Smack it onto double speed and watch it, because these guys do give out some little nuggets, and it's worth knowing because it confirms what many of us are already thinking. Many of us researchers are actually seeing developing already. Now, the final point I'm going to make with this is from this video is where they mention the stupid mentality, the insanity of people, and without offending people, the herd mentality that 80 to 90% of people seem to have.
Investing is the one place, I find this very interesting in my whole life, is investing is the only place where when things go on sale, people run out of the store, right? Did anybody run out of the store last Friday? No, they ran in. They're beating each other up to buy big screen TVs because the price was down. Now, price of this asset that's going to change our lives over the next 3, 4, 5, 6 decades is on sale, and people are running away. But what people are missing, and this is the part that I don't understand, the last 5 years, and that's the period that matters. First 5 years of Bitcoin, low transaction volume, not really widely accepted, but last 5 years, it's the best performing asset class in the world, bar none.
He doesn't see. I would love to just talk to these guys for a couple of hours and just bring my notebook and just talk to them and just ask all these questions and just pick their brains. But he doesn't even understand this whole herd mindset, Black Friday, compulsive buy-in. Compulsive buy-in, in my opinion, is the route to being broke. We can talk about that in another video. I have done rich poor mindsets in the past, and there is a massive science behind it. But on that note, let me know, guys, what you all think, and let me know if you're buying Bitcoin at the moment. Where do you think the bottom is going to be? What do you think? When do you think the institutional money is coming in? Thank you for watching. Check out the links below to everything. Don't trust what I say. Don't trust what anyone says. Don't even trust what these bastards say on here. Do all your own research. Thanks very much and take care.